Hey traders, Nick Shaheen here, looking at a quick lesson, actually two lessons in one. One is on levels, the other one is on trading options, maybe even just trading in general. Okay, but before I forget, at the end there'll be a pop-up in the top left-hand corner, somewhere in the left-hand corner, to subscribe to the YouTube channel. It's free, and I post stuff all the time, so give it a quick look there. All right, so this is the SPY, the S&P ETF. The index is SPX. This is the ETF. It mirrors it. Whole bunch of companies in there, and yesterday on Monday the 5th we had a terrible day, huge down day, follow through on the fears of currency. You know the story, currency wars versus economic war, but turns out wrong. So today bounced. The bounce is not as big as the dip, but that's still profit yet to come. So without a new headline. So yesterday on the lows of the day, I went long the SPY via lottery ticket. Basically, it was, this move is too big. I've seen stocks falling, Apple down 5% and change, on really no material impact. The bottom line impact on tariffs hitting Apple was going to be like maybe 2 to 3% on the bottom line. So call it 5% on the bottom line. So 5% drop in the stock price was ridiculous to me. So I took a long shot. I used, what did I use? I didn't want to fight the short-term fight, so I bought December calls at 300. So 300 is way above now, but we were there just a few days ago. So this is a 2-hour chart. So right here is August 1st, and this is where 300 was. August 1st, so 4 days ago, not even a full week worth of trading. We had a weekend in between. So the first lesson is about levels. So today somebody asked me, what do I do about levels? And I said, okay, so the easy way is to pick two levels to watch. 287 is a round number. I said that would be, it's a little lower actually it was, but let's call it round number. That would trigger some buying to the upside, and they would target the 292 to close the gap, so 290 plus, but there will be resistance exactly where we are right now. So I expect it at 287, 288 to stall a little bit, but if the bulls can continue tomorrow, if we get an up open, then they should be able to make headway into closing that big gap. So conversely, on the downside, I said there's a blended. There are a couple of levels to watch. One was like 284 and change. One was a little bit lower than that. So a blended 284 was an easy round number to remember, that anywhere below that, the bears, the sellers I should say, but they may not be bears, they just may be sellers. The sellers would, it would invite some sellers. So it would increase, the selling would increase, how about that, to test the low or lower. So this was the range. So the lesson number one is, how do I pick the ranges? I look left and see what happened before. And those levels are going to be resistance and support on the way up and on the way down. It's very easy and it's repetitive. All right, what about the trading part? Okay, this is where the science comes in. So I'm going to go to a daily, same chart, only daily. So these blue lines in here are the lines we were looking at. So maybe I'll go to 360. Okay, so this was the same stuff we're looking at. And we're back at the gap, open the gap. So I said I'm going to buy the 300. And I was right. Overnight I had a 25% profit. Did I book it or did I not book it? And this is where the lesson comes in. Second lesson. If I'm playing with options, what do? I can book it and have 25% win overnight. Depends on the portfolio. Maybe I want to do that. Or, statistically, looking at what the VIX did, I should hang on to it overnight. Or I could spread it. What does that mean? I can sell something higher. And let me bring a picture. All right, so this is the chart. I'm going to bring in the options chain. So this is the SPY options chain. Hard to say for me. I'm looking at December right here. It's got 136 days. Remember, I bought this yesterday. I paid $4.35 per contract. So today it was at the high, it was 540-ish, I think. So I had a 25% profit, like I just mentioned. I could have just booked it. Or I could now sell the 302 and collect more than what I paid yesterday. So what does that mean? It means I got paid to be bullish the SPY through December. I got paid to be bullish, meaning I cannot lose. So what happens? It means I got paid, money went into my account, and now as a result, I would own a debit call spread. So a bullish position that would profit even more if price continues to go higher. That's one way I could have done it. The other way is I could have sold something shorter in time. Let me see here. Let me go to September 3rd. And the 300 for September 3rd is 54 cents. So I can sell this one against my long. That doesn't add risk. All it does, it brings in some money. It's like owning stock and selling covered calls against it. So I owned the December longer term 300 call. So I own the right to buy it at 300, the SPY. So I can short it at 300 shorter term. What does that mean? If I sell this one, I commit that I'm short at 300. So if it goes to 3 million, I'm out a whole bunch of money. But not really. Why? Because I own the right to buy it at 300. So it'll be a wash. So this way, I can put it to work and try to collect some money. If I don't want to do it at 300, I can go to here. So if I do 10 contracts, I can collect $300 and risk nothing, really, except to limit my profits for the next 28 days. So if the SPY doesn't reach 302, that money disappears in my favor. So the 300 goes into my account today, and the bet dies. Whoever bought it lost $300. That's how it works. So I don't sell more than I own long. So if I did 1 contract, I only sell 1 here. If I did 10 contracts, I can sell 10 here. I don't have to sell 10. I can sell 5, but I can't sell more. I could, but then I'll be short, and I never do that, especially not in an ETF. Okay, so these are 2 ways of, actually 3 ways of booking profits. One way is to sell whatever I bought. So I bought December, I could have sold it and profited 25%. If I still liked it, I could have sold it into a debit call spread, vertical spread, same month, December 302, 303, whatever I want, 301. Or I could come shorter in time and sell something shorter like this one into a calendar. So what's a calendar? If I sell the 300, that's calendar. Why? Because it's the same level. Let me see if I can visualize it for you. All right, so if I sell a, let me go to this. No, yeah. So if I do it at 300 here to sell it versus my long at 300 here, then it's a calendar, same level. But if I sell it higher, it becomes a diagonal because I can draw a diagonal between the two visually. Diagonal versus calendar. That's the only difference. Okay, so these were 3 quick lessons actually. 1, levels. 2, how can I book profit without getting out of the position completely? I can do it by doing it vertical, debit call spread, or calendar, debit call spread, or diagonal, debit call spread. If you have any questions, you know where to reach me.